Okay, let's go through the stock market technical analysis, look at the broad markets, we'll look at these tech stocks. Gold's kind of interesting. A few things I want to point out that are actually interesting this morning. So we'll start off with our tech stocks, triple Qs. You can see we're still in this bearish rising wedge. We still have negative divergence. Still holding trend. All right, there's your bullish trend. We're still really holding that trend. And because the trend's been violated a couple times, you can see this is right before NVIDIA. Then they gapped it up. Then they dropped it back down. Then they recovered it. So that trend line's starting to become a little less of an indicator. So what we want to do, at least what I'm looking to do, is use that NVIDIA pop. Here's where NVIDIA announced earnings. All right, there's your gap up. That's where the buyers, there should be buyers there for sure. And I would, so a break of that, a breakdown from there is the sell signal from my perspective. That's kind of your next sell signal. So that's down about 2% down. And then a break of that would be, most likely a trend sell signal for the tech stocks. So that's what we have right now. And no real change. Going through some of these individual mega cap stocks, I know the market loves to just disregard one if it's not performing, and all of a sudden it's not part of the group and it doesn't matter, but it did matter on the way up. And here's Tesla. So Tesla's selling down about 6% today. To me, it just is a downtrend, guys. I mean, here's Tesla's all-time highs. There's your downtrend, and Tesla's very likely heading lower. All right, I think a lot lower, to be honest. And I know that one thing is, as I drive around, I'm starting to see just more and more EV cars from other manufacturers. I still don't see a ton of EV cars, but there, you see more of them. And then I'm seeing more just from other manufacturers that look like good quality cars. I think, BMW has one out that look, they're all starting to produce these. So Tesla's nothing special. Tesla doesn't have self-automated driving like they talked about. They have EV cars, and they were first to the market, so they had the first mover advantage. But that fades over time as the rest of the market catches up. So yeah, Tesla looks like it's going lower. Apple, this one's big. We'll see how this closes, but that's a breakdown, guys. That is a sell signal and a breakdown all day long on Apple. As of right now, we had support. Let me kind of zoom it in here. We had support right through here, about 180. All right, 1, 2, 3, 4. Held it through there. 5 reactions. On Friday, they closed it just below that support level, but it was too close for me to say that was a definitive breakdown. I talked about that in the live stream on Saturday. And then today, boom, breaking down. So, yeah, that's a sell signal. Unless the buyers can step in and close it back up by the end of the day, and I don't think it's going to happen, but that looks like a sell signal in Apple. As I'm going along, if you guys are finding value in the content, please drop me a thumbs up. It does help the channel. Additionally, if you're interested in getting additional trade insights, additional trade setups, and market insights, join the private member group. Link in the description below for that one. It's like $5 a month, so no big deal there. All right, so that's a breakdown in Apple. NVIDIA is the big one. That's the one that's basically carrying the market, really, up today. There's no sell signal, no reason to really be short this thing. We do have negative divergence. It's pretty, it's starting to show up. Let me just kind of, you can see it right here. Now, especially if it turns down soon, then we'll have that divergence there on the RSI and the PPO. But it needs to turn down soon in order to confirm that. Otherwise, yeah, just no real sell signal. It's just this thing's in mania mode. They're buying it every single day. It's just parabolic, essentially. I mean, if I take off the log scaling, because log scaling kind of hides it, I mean, you can see that this thing has just, it's a one-way trip straight up. So those usually don't end well. Again, most people will lose money because the masses will be jumping in on this push higher, and then when it reverses, it catches most people off guard. The early people are the ones who make most of the money on those moves. Okay, Google selling off today. Okay, that's pretty weak. It's at the 200-day simple moving average right here, so they'll probably try to hold it here. Buyers will probably try to step in, but Again, breaking that trend. All right, there's the uptrend. This is a bearish rising wedge with negative divergence, and there's a sell signal. So it's sell the rip now on Google. All right, the trend's been broken. So you probably get a rally here. It's likely off the 200, and I think that's an opportunity to sell into that thing. So Google looks weak, Apple looks weak, Tesla looks weak, Microsoft is still holding trend. It has very clean and clear negative divergence. Okay, so that's a very obvious divergence telling me that this trend's about to be over, but it's not over yet, and we need a sell signal. So there's your bearish rising wedge. Lots of reactions on that support line. We need to see support break for that sell signal. So Microsoft still looks okay. It's holding up. Meta still looks okay. It's holding up. Clean and clear negative divergence, but no sell signal. So just kind of, this is your post-earnings pop, and it's lifting higher, but not that impulsive. It's just kind of grinding higher. I mean, you can see it's taken, it's moved up since earnings. It's moved up about 6%, but that time, I mean, that's taken over a month, 6% in a month. And so the velocity, I guess, in terms of the appreciation has really started to taper off and become a lot more shallow. And I think that's reflective of the momentum. You can see the momentum's drying up. So reversal is likely soon, but we don't have it yet. So that one's still holding up. And then Amazon still looks okay as well. There's your bull trend, still holding trend. We do have some negative divergence showing up now, and we do not have a sell signal. So, you've got half of the Mag 7s are weak, half are still relatively strong, or at least holding trend. And so the triple Qs is probably not going to go very far. All right, you can see triple Qs basically right now up 15%. It's flat. So we can grind higher. I could see us kind of grinding higher. Again, we don't have those sell signals, but it's probably going to have a hard time unless the buyers step in on those weak Mag 7 stocks. XLF, this is our banking stocks. They're basically pushing it to the limit here, but you've got this bearish rising wedge. I mean, look at where we're at in the wedge. It's just compressed price action right here at the apex. So it's moving time, essentially. It's time for this thing to make a move. And this pattern typically will break to the downside. And especially when you have negative divergence, all right? You've got a wedge and you have momentum dropping off. So, it should resolve to the downside. Now, doesn't mean it's going to do, sometimes they'll break it up 1 or 2 days, then it'll break down and they'll just, kind of do a false breakout. So you could be on the lookout for that. But in general, high probability this thing breaks to the downside. And then if you go to the components, let me go to my financials. The components of the XLF, the largest is Berkshire Hathaway. You can see, boom, bearish engulfing candle and moving down. So that one is on trend reversal. That is a downtrend now. It was an uptrend. You had the reversal candle, and now you're trending lower. That's the largest component. Second largest is JP Morgan. That one still looks okay. It does have negative divergence here. But they're kind of, they're basically like back testing this trend line here, and they just continue to back test it. So we need to see some sort of rejection candle there. Third largest is Visa. That one's starting to break down. A little more downside, I think, to help confirm, but it does have negative divergence. And, we start, take out these most recent lows, I would say, is probably going to do the trick somewhere right in there. Down around 273.75. You take those out, and that's probably going to be, a breakdown in Visa. So these financials are starting to look weak. Okay, let's look at gold. Here's gold futures. This basically, tracks the price of gold, basically. Breaking out to all-time new highs as of right now. If I roll out on this daily chart, the former high back in 2020 was 2086-ish, somewhere right in there. Let me kind of roll out and see. We go down to the weekly chart, and you can see even back in 2011, it got up to 19,036, and this is that big rounding bottom pattern. And so there you go. You're starting to break out. All right. So that is a breakout as of right now. Let's go back down to the daily chart. You know, it is a divergent high as of right now. You can see here's the PPO. So we're breaking out, and you have negative divergence on the PPO and barely there on the RSI. It's not confirmed yet. So if it keeps pushing higher, you're going to just burn through that divergence. And, you know, like the RSI, just a little higher, you burn through that divergence. And the PPO, you know, it would eventually burn through as well. So look for confirmation on that. And then something that's really interesting, you'll see all these miners, they're all ripping today. But they've been sold really hard. I mean, here's the GDX. Look at the GDX. You roll out, you can see from the high, from the August 2020 all-time high, GDX is down, well, as of right now, 38%. But you can see it's been trending lower. And gold is at an all-time new high. So you've got the miners that are well off their highs, and the product that they sell is, you know, at all-time highs. So maybe a catch-up trade here on these miners. I think there could be a you know, I mean, it's pretty obvious to see that. So they're all ripping today, and I think that could continue. I'm looking at Newmont. You know, little downtrend line here, starting to break out. That looks pretty decent. Let's look at Agnico Eagle breaking out above the 200-day right there. All right, so that looks good on that one. I mean, there's several that look pretty decent. The one thing that kind of gives me pause is the dollar. I'm not seeing really any indication right now of the dollar moving, and typically you'd want to see the dollar, you know, falling if gold was going to have a lasting rally. Now that might happen, but we're just not seeing it as of right now. So that's the one thing that gives me pause. Here's the 200-day simple moving average. The dollar's still holding that, holding up. So, you know, that's the one thing. I'm just, you know, to not see the dollar really dropping, it just doesn't really confirm that gold is going to continue to rally. So if gold does, going back to the gold chart, if gold fails this breakout, which, you know, is possible, then yeah, that would be pretty bearish. And at that point, you're probably going to head back down to kind of the bottom of the range on gold. You know, potentially all the way down here to 1800 or so. So we'll see on that one. Just, you know, I'm keeping an eye on it. And oil, here's oil futures. Again, oil's still kind of holding that resistance level. It's really right about here at 79.50. We have several reactions there. So we're not breaking out on oil quite yet. So keep an eye on that. And, you know, I think it's going to break out, but we're not seeing that quite yet. So, and then there's a trade idea here. It's a good setup, but it's not actionable yet. This is DVN. You've got bullish divergence here on the momentum. You have a pretty clean downtrend line on the daily chart. And you're just right there. All right. That's not an impulsive breakout, so we can't say that's a buy signal. Again, I think oil needs to break out probably to see this thing run, because this is a oil production company. But it's definitely a good setup, so we'll keep an eye on that one. And I'll wrap up with interest rates. Here's the 10-year Treasury yield bouncing today. Okay, so on Friday it dropped, and that's pretty much why the market decided to rally. Hit the 200-day on this TNX, bouncing up 1% today. So interest rates are not out of the woods, and if you continue to rally, which I think it could do that, then we're heading back up to these highs, 4.33% on the 10-year. We pop that, the market should start to freak out. Okay, and again, interest rates are making higher lows, and they're making higher highs. So we currently have an uptrend in the 10-year Treasury. So it's just a matter of time, you know, unless this, you know, trend changes, it's just a matter of time before the market takes notice, and, you know, you have a massive correction or, you know, whatever it's going to be. But in general, rising interest rates will be bearish for interest rate sensitive stocks for sure, which, you know, is tech, the home builders, things like that. Okay, so that's all I have. I'll get the video out. Thanks, appreciate it. Drop me a thumbs up on your way out. Catch you on the next one.